6/20/22, I have OIH. Oh, yes, I do. Ah, what a great bull run. When we featured OIH, and we have several different times, okay, let's make that straight. But one of the things is we started featuring it back over here on 3/1, and we had big trading ranges and profit taking, but we kept consolidating across the ridge here, made new highs, had big pullbacks right here. Okay, came back up, came down, but let me tell you what happened is after all of the pullbacks, double bottom patterns, we went up and we made a new high right there. Oh yes, we did, and that was a doji, and they've sold down 1, 2, 3, 4, 5, 6, 7 days, and I'm testing the 200 simple day moving average, and I'm oversold on a daily stochastic, and the sell signal on the MACD is -7.4. The balance of power is negative 0.8. That slow stochastic, 7.5 ISR, 19.28 at that setup right here, right now. Tomorrow morning, OIH holds and it sets up, we buy it. If it breaks and goes below that 200 day, then the rest of the oil patch that's been the biggest bull trend, and it seems like the last 50 years, this is part of that 50-year bull trend right here. And I can tell you, we're testing that 200 simple day moving average on the OIH. And there was a lot of profit taking. We rode them all the way up. They moved slow, but we kept making higher highs all the time. And with this depth of this pullback to that 200-day moving average is a simpler break. It broke below the 50. Oh, yes, broke below the 100. Once it broke below the 100, though, it went down 3 days to test the 200. Now, if we set up immediately tomorrow morning, we look at taking an entry on OIH. If it sets up with the parameter, holds that 200-day simple moving average, we're in. We'll use 90-day call options to go ahead and trade it with short-term put options against trade. That way, we get the big rally. If we were still in it, then we would buy puts on the way down if we were still in the calls and so forth. But that setup at the 200-day moving average, I've been waiting now for almost, it seems like, forever.